Hi, everyone. I'm Saurabh Lal. I'm the research director for the Aspen Network of Development Entrepreneurs. As a bit of introduction about Andy, we're a network of about 180 organizations, and our newest member is BCTA, so welcome. Uh, our members are essentially intermediaries that support small and growing businesses in developing countries. And so we have a whole range of different types of organizations, including impact investors like Acumen Fund and Grassroots Business Fund, capacity development providers like TechnoServe. We have foundations like City Foundation and Rockefeller. We also have a number of development agencies like USAID, DFID, and increasingly a number of banks and corporations that are realizing that small and growing businesses are really a key source of revenue as well as potential for inclusive growth in these developing countries. So I lead a research initiative, and our focus is on impact measurement and really being able to first, at the core, really test this hypothesis that inclusive business and supporting small and growing businesses can lead to poverty alleviation. It's obviously a very large question, but we're trying to do this in various ways by supporting academic studies and large-scale impact evaluations. What we're also trying to do is recognize that practitioners need more effective ways to collect data, and so we're doing a number of projects around data collection. And then lastly, just trying to facilitate more collaboration between academics and rigorous research institutions along with practitioners to ensure that the findings are actually relevant to the practitioners themselves and are not just for publications. So I guess as a matter of introduction, I think, two things about this panel I think are particularly interesting. And this is conference season, so I was at another event earlier this morning. It was the World Economic Forum, and they were releasing a report on impact investing. And a couple of things stood out from that report. The first was that within the whole impact investing sector, financial services account for about 70%. They're considerably larger than energy access and healthcare and education and all of these other services. Even when you exclude microfinance, that's still over 40% of impact investing is financial services and financial inclusion. So clearly, there's a huge role that financial inclusion plays in driving poverty alleviation. The second point was they realized that the definition of impact investing and by corollary, inclusive business and others, requires the measurement of that impact. And that's really a critical aspect that cannot be excluded. And that's included in the definition of impact investing in that report. And I think, this is why I think as we continue to grow the sector, there continues to be this overwhelming emphasis on impact measurement, which certainly isn't something that we've figured out completely, but we've made tremendous progress over the past few years in developing standards, in testing various hypotheses, and really sort of making a more rigorous effort to measure and demonstrate our impact. So we're going to hear from three very distinguished panelists today, and I'm really pleased to introduce them today. So to my right is Mujahid Hasan, who's the Vice President for Products and Solutioning at Fino Paytech. He is responsible for designing and implementation of products, and he also heads the bid management team and is a key point of contact for all of their clients. He's been working on several different projects, including point-of-sale applications, smart card applications, key management systems, and other technology-related innovations for financial inclusion. Previously, he's also worked on a pan-India national health insurance scheme that's aimed at over 60 million people that fall under the poverty line in India. Um, to his right is Mark Devdasan, who is the Group Head of Sustainability and Regions Corporate Affairs for Standard Chartered, based in Hong Kong. And he's also in charge of the bank's overall sustainability agenda, which is a core part of their strategy to build sustainable business and economic growth. And he's been at Standard Chartered for over 28 years, and he's going to speak a bit about their SME investing as well. And finally, we have Carlos Namoto, who's the Director of Sustainability at Bank Santander in Brazil. Carlos has over 10 years of experience in the sustainability field and has previously worked in private banking, asset management, strategic planning, and in various organizations. He also teaches strategic business management at FGV in Brazil and is director of the Brazilian Business Council for Sustainable Development. So clearly 3 very knowledgeable and prominent panelists. And so I'm going to turn it over to Mujahid for his first presentation.
Have the presentation. Yeah, thanks for the introduction, Saurabh. Am I audible? Because I'm jet lag, I'm a bit sleepy. Yeah, so we can just start the Fino presentation. Yeah. So, yeah. Next slide, please. Yeah. Yeah. Okay. Yeah. So just to brief you all about our company, we were formed in the year 2006, and we are headquartered in Mumbai, India. So what we do is basically we provide the technology and the banking operational services to various financial institutes across India. So basically, our set of customers are the banks, the insurance companies, and the government. I think it's not very clear from here, but I would like to. So in terms of the operational thing, what we do is basically our solutions are based on technology, which is on smart cards and biometrics. Till date, in this space of financial inclusion and micro insurance, we are servicing around 65 million customers across India. And for this, we set up various transaction points. Basically, they are called the Fino Bandhus. In the English terminology, we could say them the customer service points. So if Bandhu means friends, so we call them as our agents as bandhus, so they're the customers, they're friends to the customers. Mm-hmm. So we have set up around 50,000 transaction points. We service across 27 states in India, operating in 450 districts, and nearly around 2/3 of the country we cover in terms of our operation. So of course we do this using foolproof technology with the identification, because the customer is illiterate, we provide them with the authentication mechanism of biometrics so that the PIN cannot be misused, and all that is what we do. So in terms of the investors, we are a sectorial entity with investments from private as well as public sectors, as well as international investors. So primarily our investors are banks, and few of them are the UBI, which is the second largest public sector bank. Then we have in the private sector the ICICI Bank, which is the largest private sector bank. And in terms of the international investors, we have the IFCs, the Blackstones. So if you see, our vision is to be a universally preferred choice of customers for fulfilling all financial services needs. So, and our mission is basically, can you just, meeting the financial products and service needs of unserved and underserved retail customers through all possible channels. So what we do is basically not just have the agents, but we also put in alternate channels like the ATMs machines. Then we also, in terms of our workforce, we give them a very conducive environment to work with. Then most importantly is that we build a collaborative partnership with various agencies across the globe, to where we share our knowledge and also get information as to what they do. And can excuse me, please. Yeah. Okay. Yes, it's okay. You can. Okay. So basically, if you see the pillars of Finopaytech, so we thrive on these four things. One is the technology. One is the technology. The second one is the channel. What the channel is basically the field staff. Then we offer some critical core products, which are completely designed for the BOP customers. Then the operations. Basically, if you are running such a big operations, managing 65 million customers, so we need to have all those technology systems, the backend systems to be in place. So if you see in terms of the technology, of course, as I said, it's very reliable and robust. We use like the state-of-art technology with the handheld device being given to our bandhus, the agents. Then in terms of the channel, as I said, we have around 50,000 transaction points. We also work with alternate products like the ultra small branches. So basically, these are like the fixed branches within the villages. In terms of the core products, we offer all the financial products which are available to the urban customers. But these are all more like the low ticket. One is the normal savings account. Then you have the money transfer facility which we provide. Then you have the deposits and various other this one. And one important thing you could see is the financial literacy services, because what we see is that the customer base is not that aware about the basic financial products. So it's very important that we need to provide them the information about that. So we partner with various agencies in providing financial literacy programs across rural India. So, but if you see in terms of a customer base within in the Indian ecosystem, we see when you see the income level, like if it's an annual income of nearly around 1,500 to 200,000 US dollars, they are categorized as the below poverty line. So that constitutes the crux of the customers, which is the 60 million customers. But the other set of segment which we're looking at is around the customers who are earning around 300,000, no, sorry, 3,000 US dollars income. So that constitutes around 90 million customer base. So we have actually segmented and targeted customers who are actually of low income. So that has been our targeted market. So we don't serve the rich people on these products. And in terms of the products, as I said, I mean, just have to repeat the same thing. It's more on all the financial products which are required in the market space, we provide them. That we are doing that through our channel and through our technology and our operations. This slide is not a bit clear, but it just gives the progress, how Fino has achieved these numbers. So we started operations, if you see, in the year 2007, but by the year 2008, we were actually around 1 million customer base was our base. But over a period of time, if you see the graph actually shows the number of customers, the amount of cash which we handled is what we are showing. So if you see nearly, if you see in this year, it's like $3,600 million is the cash which we have handled for the various types of products. So what is our vision in terms of this financial inclusion part is like basically we want to like to operate in at least in 500 districts. We would like to serve 100 million underbanked customers. And most importantly, if you see, we are actually employing the local people within the village to actually do this as our agents. So we are trying to do a local level employment for 100,000 people. So currently we are present in 492 and 67 million customers being serviced across 45,000 points. So as far as impact measurement, yes, we are open to measurement by various agencies. There are a lot of agencies which approach us to do their research work, and we are open in providing our data points. Of course, this report is a bit old, but I think this is the last published thing. I think it's in 2010-11 which it was published. So if you see in terms of the active customer base, the average netted average was around 37% of the customers which were active. But if you see with the Finos, it was around 60 plus percent were active customer base. So our contribution to the Millennium Development Goal, we want to connect all unbanked to an electronic grid of formal financial system, empower economically disadvantaged and socially vulnerable communities. So we also do formation of groups for micro loans and all those things. So it's more of a community based. So the women's. So we form groups for women's where we train them on the financial products and encourage them to do savings, and post that once they actually do savings for a period of 6 to 7 months, and then we find that they're saving regularly, then we offer them loans through our banks. So what we do is how we plan to do this. We are plugging this access of deficit writing on 4 pillars. That is the products, the operations, network and technology. So that is the doorstep banking at affordable cost. So by usage, that's important to have sustainability for providing services to the rural people. We should be in a position to provide at a low cost. Otherwise, we would not be sustainable in the long run. Earlier, we just started with the normal savings product, but post enrolling of these people, then we sat with the principals like the insurance companies, the banks, and came out designed low ticket financial products. So and offered them to the banks, especially if you can say some products like telemedicine with insurance, with health insurance is one product which we designed. So which had caught the attention of the customers. Then the important is the financial capability building and empowering last mile customers to make informed financial decisions. That is through financial literacy. That means we do a lot of financial literacy programs for the rural customers to understand the benefits of the various products. And the last thing is the generate local level employment of our CSPs and operators. So this is what we do, and we could I will leave the house for discussion. Yeah.
I think we'll keep questions for after the 3 presentations.
Yeah.
Can we get Mark's?
Thank you, and good afternoon. I'm Mark Devadasan from Standard Chartered. 28 years in the industry. I haven't always been in the sustainability field. Been a frontline banker, CEO, been on the governance side, but it's been a fascinating 2 years in the world of sustainability. Standard Chartered, you may or may not know, it's a 150-year-old organization. Started in the UK, headquartered in the UK, but you'll never find us on the high streets. We are in Asia, Africa, and the Middle East. A full-service bank, retail, corporate. large developing SME business, and I'll spend some time talking about how that business has developed, and more particularly how we've been working with BCTA and developing that side of the business. Let me just touch it. Firstly, I'm just going to give a bit of background about our thoughts on sustainability. I mean, if you ask the word, what people think of it, there's many, many definitions, and a lot of people would think of it as philanthropy or environmental process. We think of it more as a total approach to how we do business. And I'll give you an explanation of how we look at that. But I am personally trying with my team to ensure that our organization, and then a wider appreciation of what a total organization can contribute, rather than just looking at a successful organization investing cash. We have a brand promise, a phrase we use quite often called "Here for Good." It's a phrase that has many meanings. A force for good in industry, a sense of permanence, longevity, and I suppose when you're 155 years old, you can say there's some degree to which that works. We've got three key pillars to our sustainability agenda. One is about our core business, about how our products and services contribute to sustainable economic growth. And we drive our businesses with that phrase in mind. But these days, there needs to be a balancing item, and so we talk about being a responsible company. We've introduced the idea of society. We used to talk very much about stakeholders. Typically, stakeholders have, let's say, skin in the game. You pay them, whether they're staff or they're shareholders, or whether customers get products and services. But these days, increasingly, society will also look at and judge large companies. So being a responsibility, we would see as a balancing item. And then when you get that right, when you get that model right, and Standard Chartered over the last 10 years has seen rapid growth. We've gone from 28,000 to 89,000 staff in 127 nationalities. And we've significantly increased our exposures to our markets. But when you get that right, we can then invest in communities. And we've got two key areas: health programs, and we're rapidly developing an education program, which is what I'll talk about today. And underpinning that, we have a commitment through employee volunteering. So all of our staff are entitled to take 3 days employing and volunteering leave. And at the moment, after 3 or 4 years of this program, we're just about averaging 1 day. So it's a journey we're on, but 86,000 days of volunteering can be mobilized quite effectively with plenty of capacity to move forward. When we look at and I'm going to talk now about our relationship and how we got to be involved with BCTA. When we look at our SME business, which was always a fast-growing business, I think we have around 700,000 clients around the world. I have no idea how you manage 65 million. That's a complete scary concept to a commercial banker. But 700,000 SMEs, it's become quite a competence to us. And as we develop relationships with governments as well in many of our markets, I remember this in Thailand as a CEO, governments, SME matters to governments. It's an engine of growth. It's an engine of GDP growth, an engine of employability. And it's increasingly on all of our agendas to support this area. So actually starting with DFID in the UK, but then later through discussions with BCTA, we launched a pilot scheme in Pakistan for educating and supporting SMEs to be more effective in presenting themselves and understanding finance. We worked with a partnership with PwC. We've got a very good friendship with PwC. And from that pilot in Pakistan, we've broadened our work, and we've now reached out into 6 countries. Now, I should say, broadly speaking, we are educating and giving training programs through PwC to our existing clients, and we've reached over 700, just 700 by the end of the year. Most recently, though, and one of the reasons I'm here in town is because we'll be at the CGI, we're going to be making some announcements at CGI about taking this. We could call it a pilot, but we're going to scale it up. We're basically going to use our relationship with PwC to use our staff through skills-based volunteering to reach out into the community and start training SMEs. And this program has been developed and is just about to be launched during the second half of the year. So we'll be making an announcement about that. We also have a program that is called Goal. It's another program that we're going to be announcing an increase. It was been piloted in around 6 or 7 countries, addressing adolescent girls, looking at health, financial education, and some empowerment issues. And again, this has been something that is really making a difference. This is a 12-month program. It's not a one-day course or something. And we're going to be to broadening that as well. When it comes to the SME training, we've really seen some progress. We do measure through starting with base measurement and looking at surveys afterwards. We're definitely seeing improved understanding of financial performance. It helps balance the relationship with the banker. It's a fairer, balanced conversation. They have a greater expectation of what products and services could do for their business. And it's also helped them develop their networks. And these are some of the key benefits that we've seen. So we're now really looking to scale this up from being something that we did with a partner, a collaborative partner like PwC. Now we're going to leverage our workforce, which, as I say, is substantial, and that underpinned by the employee volunteering program, which we want to now really scale up and move to skills-based volunteering. So I'm very conscious of time, so I think it'd be better to stop there and then lead to Q&A later on.
Sure.
Thank you.
Okay. Thank you, Mark. We can move right on to Carl.
Yes. So, do you mind if I speak over there because I cannot see the television from here? Yeah. Okay. Okay. So sorry for that. So good afternoon, everyone. We as Santander Bank in Brazil, we're just being accepted to join the business call to action group of companies. For us, we feel very honored with this decision. So I have here some very few slides. First is about Santander. The word Santander is a Spanish bank, but presented in more than 40 countries. And that's the numbers of Santander in the world. And Santander in Brazil is the 3rd largest private bank with 28 million of clients. You know, so it's a huge bank in a very large country. So, and about sustainability. So Brazil is a large country with huge challenges, and also is diversity of the diversity is one characteristic of our country. Yeah, maybe I could be one example. You know, I'm Brazilian with Japanese background, Portuguese native language, work for a Spanish bank and trying to speak English here. So that's Brazil, you know, that's my country. So yeah, and so lots of challenges, but as a company, we needed to define one strategy, some drivers, and so we defined 3 specific drivers, you know, to work on. And to be honest, I think we used to say that there is not sustainability goals. You know, we have sustainability goals, but in the concept, there is not sustainability goal. There is business goals, and we have to do sustainability and to embed sustainability into the business goals. So that's one key issue and one key driver to set up these 3 dimensions that we are working on in Brazil. Social and financial inclusion, education, and climate change. And here you have some numbers. We have a good news and not good news. For example, 28 million for Brazilians are coming from the poor situation to the not poor, not medium class, but getting more income, you know, and demanding services, financial services, products, mobiles, householding, cars, and everything that you can imagine. So we are seeing it in Brazil, but at the same time, almost 40% of Brazilians are excluded from the financial systems, and I'm talking about 200,000 of inhabitants in Brazil. So yes, 40% is a good quantity of people. Same situation in education. We have 98% of the children going to school, but only 11% of Brazilians or something like that, are not do not have the higher education. We see university, your university degree. So we have a huge opportunity here, to work on it as a social program and as a business. And also climate change, which is not our focus here, but we define the climate change as one of our key strategies for our business and sustainability. And we have here some numbers. So how can I respond to it as a bank in Brazil? And social and financial inclusion, I will talk a little bit more about our microcredit operation in a few minutes. Small and medium-sized companies, we have almost 700,000 clients in the bank only in Brazil, and helping them through the social networks and websites. Education is another focus. We have the largest program in the whole world on supporting students, especially to enter in the university, and also the university and professors, and the whole community of university. So that's the program, some numbers that we have had over these years. And climate change. Climate change is something that can be applied to small and medium companies. For example, we disbursed, is not too much money, but it's a good money, almost something about 400 million of credit to improvements in terms of energy efficiency and water to small and medium companies in Brazil. So here for inclusive business, I would like to talk a little bit more about our microcredit. So we started this operation in 2002, and I have implemented it, inspired by Professor Yunus. And I remember, do you know Carnival? Carnival is a kind of, I don't know the name. Maybe you can help me as a cultural party, I don't know. It's not about women naked, but it's more than it. I know that you are thinking on it, but it's not. It's more about culture, And so it's a 4 days of day offs, as I can say, 4 days stop at the soul. And I remember one day before the carnival, one of our vice presidents called me and other colleagues to his rooms and said, "Do you know this book is the book, The Banker for the Poor of Muhammad Yunus?" And we said, yeah, more or less. No, okay. I would like to give one for each one. You will read during the carnival. And after that, we will start a microcredit bank here in the bank. So, well, yeah, we obviously, we read the book, and we started, one microcredit company, which now is the largest microcredit operation amongst the private banks in Brazil. The first one is one public bank in the northeast part of Brazil called Banco do Nordeste, but we are the largest one in Brazil. And so we have here some numbers. 70% of our clients are women, and I'm just seeing what my mom used to say, that women are more responsible and best payer than men. And this is completely true, because we are seeing it in our operation. We work especially and more focused on the northeast part of Brazil, but also we have operations in São Paulo, which is a huge city, and Rio de Janeiro. Yes, we have 90% of on-time payment, so it's a profitable operation. We reach out the break-even point after 5 to 6 years of operation. and we want to be profitable. And from the start point, we defined it that microcredit must to be profitable to prove that it is possible to do business with this segment of the population. It is not a philanthropic project. No, it must to be a business to prove that it is possible, and we proved that in our operations. So now our challenges, yeah, I think that's it. So our challenge, we have a challenge now to scale up. When I saw the numbers of my colleague, 50 to 60 million of happy customers in India, so, it's a huge, and I believe that we can reach 1 million, but we have some dilemmas, or not dilemmas, but some alternatives. For example, alternative number one, to split off this operation from the Santander Bank and create another company specific to microcredit. This is one alternative. Second is to start to fund another small MFIs in Brazil. This is the microcredit institutional finance, microcredit, other small microcredit companies in Brazil. We can do it. We can fund them, and they will do the job. This is the second option. And we have the third one is to growth organically, raising more agents of credit, and opening up more branches, so the costs will increase during this time too. So we are now thinking strategically on how the best way to reach more clients, maybe 1 million in 5 years. I don't know. It is not a formal goal yet, but I just would like to share to you these alternatives, and maybe it can support us on our debate from now. So thank you very much.